first of all, what do you make of that 120 billion Hong Kong dollar relief package from the government?
Well, this is actually totally against our Chief Executive Carrie Lam's personal ideology. She has always opposed a universal cash handout, all right? Because a year or two ago, she handed out $4,000 to needy people, and it created an uproar as to who's needy and who's not, because everybody who's needy do not pay taxes and the other pay taxes. So this is the first time it is a universal cash payout for all, and the amount is staggering. The last time we did it is 2012 under John Tsang. It was 6,000 Hong Kong dollars for everyone. Now it's 10,000. So it shows the severity of the impact of the virus. Plus, it's a combination of the virus and the protest. So it's everything. Our nightmare started in June. It is now 9 months. First the protest, then the virus. So a lot of the citizens are hit in terms of not being able to work full hours. Some are getting laid off, and some are getting their salaries reduced. So this is meant to really boost up the economy.
Yeah, but do you expect it to really boost the economy, especially when it comes to those cash handouts? Because some people are saying, you know what, given the uncertainty out there, people are just going to stuff it under their mattresses.
I doubt it. Hong Kong people's memory are short. I look back at SARS 19 years ago, 17 years ago. It actually rebounded very quickly. Because this time, don't forget, we took a lot of precaution. Our economic activities are really suppressed because of stringent measures by government. All the borders are closed and everything. Our number of cases is not high, and it's not rising at a high rate. So basically, it's just a fear more than actual situation. So in that situation, I think it's going to rebound quickly, although I don't see tourists coming back from mainland in the foreseeable 6 months. So the bigger problem now is the government is predicting deficit for the next 4 years, so which means they're looking at 6 years of deficit in a row. So there's a huge debate in Hong Kong whether we are going to a structural deficit era, which I personally believe so, and I'm really worried. And I'm pushing for tax reform, broadening our tax base, because we cannot survive forever based on a very simple tax base with no capital gains tax, no dividend tax, none of that. I think those eras are gone. And the reliance on land sales, I think it's going to diminish, cannot be counted on indefinitely.
And Michael, in the meantime, you're seeing small retailers, small businesses in Hong Kong continuing to struggle, and it doesn't look like things are improving anytime soon. Should the government be doing more to support these businesses? And is there anything that they can do to address the fact that Hong Kong landlords, I should say, would essentially rather let those shops be empty than do any kind of reduction in leasing?
There are two primary stakeholders in Hong Kong. One are the citizens. Now we have 10,000 Hong Kong dollars apiece for each. That, I think, is good for the time being. What is not good are all the businesses in Hong Kong. Everybody faces a common enemy, and it's called rent, whether it's office rent or commercial rent. Now, government's $30 billion handout is not doing anything to the businesses. In fact, some are being excluded, and they are just pumping money directly into the businesses based on a per capita basis, which everybody knows is ridiculous. What I've been proposing is to attack the source of the challenge, which is rental reduction. We need all the landlords in Hong Kong to reduce rent by half for the next 3 months. So I'm pushing for government to push out tax credit incentive. So every time a landlord reduces rent, 3 times of the tax originally due on that rent will be credited to the landlord as an incentive for them to reduce rent. I think we need the help of all the landlords in Hong Kong to pull this thing through. Otherwise, a lot of retail business will go bust. I'm facing also a very
Michael.
big similar challenge in Hong Kong myself. I have 40 stores in Hong Kong, mom and pop stores of 1 or 2. The common enemy is rent. It has never been payroll or overhead.
Michael, I just want to hit pause for a second. I want to break some news coming through from the Bank of Korea governor speaking at the moment, saying that it's possible that South Korean GDP will contract in the first quarter. Governor Lee saying that there's still room to take actions if needed. Some unconventional tools to some degree are available, but that they're not considering tools such as quantitative easing. They would be looking at the side effects if a rate cut is needed. And earlier he spoke about the high household debt and some of the other constraints when it comes to their monetary policy space. The Governor Lee, they're also saying that they're studying tools to prepare for a situation where the Bank of Korea is running out of ammo. Of course, they kept the key rate on hold at 1.25% rather than cutting to a record low of 1% as most in the markets had expected. Michael, let's get back to the subject at hand, which is, you hit the nail on the head, which is rent, right? Everyone complains about it. It's become an issue over so many years. Now that the economy is really tanking, now that there's a serious question as to Hong Kong's very future as the financial hub in Asia, I mean, is there likely to be any change when it comes to the levels of rent that we see, both commercial and residential in the city? We know residential has come down somewhat.
Well, I can say about the residential because it is not always tying with the economy, but I would say retail rent, okay, definitely will not be going up for a long, long time because we're losing the bulk of the mainland tourist. In terms of office rent, it has a lot to do with how quickly China recovered because a lot of the office takers, almost 90%, I guess, of anybody hiring an office in Hong Kong has a business in China. Okay, so it depends on how fast China mainland recovered. In terms of residential, it's a different matter. People look at Hong Kong as a long-term safe haven for all their money. We have low taxes, so I think that might be here to stay for quite a while. So there are 3 different sectors in terms of asset values and rent.